Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey. Wow. Hey, I can't wait for this for this podcast to go out. This is amazing. Did you see what happened last week in the market?
Yeah. Well, obviously the stock market didn't do so good, but the bond market.
Horrible for the stock market.
Yep.
Wonderful for interest rates.
Yeah.
I mean, honestly, so yeah, it's such a yin and yang because, I have money invested in the market. I have real estate. It's been so challenging for buyers to jump in the market because of affordability. Let's just eat the elephant in the room. Affordability is the number one thing that's keeping people from buying right now. Even if it's because they're moving from their 3.5% fixed rate that they already have to a mid sixes rate. But now things are starting to shift. They're getting much better. Remember, bonds are what mortgages are tied to. And when the stock market is doing really well, equities move into the stock market that deteriorates the bond yield and interest rates go up. But when the stock market isn't doing so well, that institutional money is moving out of there to protect their investments from losses into the bond market. That bolsters the bond market. And look what happens to rates. Let's go ahead and do a quick screen share here. So that's Friday right here. Okay. That was Thursday, Friday. So look at that. For a whole week, we started to really improve. Now, if you get way back, that's Friday. That's Friday, Thursday. You get back over here. This is September, back when they dropped a half a point Fed cut, right? And then that was a quarter point Fed cut. And then that was a quarter point Fed cut. Every time they cut the Fed rate, things got worse. Mm-hmm. Now they left it alone and it got better on its own.
That's right.
I think this market, you see this, our next ceiling of resistance is way up here. But we could get up here. That's going to get rates down into the low sixes on 30-year fix. So if you're sitting on the sideline, I'm going to tell you right now, now's the time to do it. If you get greedy, I do believe we're going to bounce off that because this stock market's not going to tank for a long time. Okay. We're going to bounce off that and come back down again, and rates will likely start to pop up again a little bit. So don't be greedy. If you want to buy a home, you want to refinance, now's the time to talk to us. Tom, I created a VIP watch list for refinances because I did not think people should refinance, because I don't think interest rates were attractive enough to make it worth your while. But a lot of lenders are just preying on people, particularly veterans, people with FHA loans, to be able to refinance them. But
see it all the time.
And they'll tell them, hey, I can save you money, no money out of pocket. And I'm just going to tell you, a veteran can only do that every 241 days. So if you did it last month, you totally screwed yourself. And I've been telling people not to do it. Wait, contact me, send me your mortgage statement. I'll tell you when the time is right. Now, I want everybody that's listening to this, that's considering refinancing, to go ahead, reach out to me. My phone number is attached to this, 407-706-3313. Send me a copy of your mortgage statement. I'll tell you when it's time to refi.
Yeah, that's
You'll
great.
Get the honest truth.
And I'll let you know. Again, you talk about affordability, right? Rates obviously are a key component to that, but prices are as well. And I am seeing more right now. I'm seeing more price decreases proactive by the seller than I am seeing new listings come on the market. So that's
it's interesting because our inventory is up, right?
Very much.
Our inventory is up, but there's still not as many buyers coming in, though, is there? Are we seeing that flood of buyers? I know there's more.
Yeah, no, we haven't seen a flood of buyers. We've seen some buyers, right? It's not horrible, but they're definitely not flooding in. And, I think, with the fact that sellers are more flexible right now, that they are lowering prices, they're paying closing cost credits, they're doing a lot, right? And at the same time, now you've got reduced rates. I think, somebody that's on the fence should really take a look at the numbers.
You know what? I'm telling you this, pigs get fat and hogs get slaughtered. If you wait too long, there will be a reversal, because don't think that these rates are going to continue to fall and fall and fall. What's going to happen is they will settle down. I think Wall Street's going to make a money grab. There's going to be a reversal on this. The stock market will spring back. I don't know if I'm going to spring back 1,600 points anytime soon. However, I think that it's going to spring back, and that's where the money's made in Wall Street. But people get so emotional and reactionary that they'll sell their stock or something when it's down. Don't do it. It's going to come back. Things will get better. But when the stock market gets better, interest rates are going to go back up again.
Correct.
So now is a really opportune time to give us a call. If you're looking to buy, sell, give Tom a call, give me a call. We'll get your mortgage all set up. Cross Country is the #1 lender in the country right now. We operate in all 50 states. I'm telling you, there isn't a loan program around that we don't have. And Tom, you and I both can help people in all 50 states.
Absolutely. Yeah.
So we're here to help. We're here to help if you just need advice. If you're a real estate agent, you want advice. If you're a mortgage lender, you want advice. We're here to help the entire industry. Do the right thing, though. Always do the right thing for the customer.
Yeah, absolutely. Absolutely. You talk about, hogs getting slaughtered, right? Pigs get fat. Yeah, I think we were talking about a story earlier, right? Where, somebody didn't rate lock in time and ended up paying a bunch more.
Yes.
Yeah.
Yeah. It happens all the time. They'll hold off. And then I'm calling them going, I think it's a good time to lock, but they still don't like where rates are, but they're letting that get in their way. And then all of a sudden there's a reversal and it got worse.
Right.
Unfortunately, and you know what? It's a challenge for me, because I don't want a client thinking I'm trying to pressure them into doing something. I never want that, because honestly, no one knows what direction the market's going to go in. So I give people the information so they can make the decision. Right. I can't determine what tomorrow's going to do. I can't determine if it's going to have a reversal this afternoon.
Sure.
But when you look at all the news that's happening throughout the week and next week, I mean, it's crazy. Look at all these important indicators that affect the market. So there's a lot of things that can happen. So like I said, don't be greedy. If things are better, it might be a good time. And if the rates get better, you can still refinance later on.
That's right. That's right.
Right.
Yeah. Well, hey, it's going to be a busy week for sure, because we're going to keep an eye on this rate stuff, and hopefully get our buyers into some homes.
Yeah, and if you're a real estate agent in the Central Florida area, I will be teaching a video class on how to use video technology the simplest way. Even for those of you that are afraid to get in front of the camera, I'm going to show you step by step what to do, how to set up your system, what videos to produce, how to capture more business, reach more people. If you reach more people, you're going to have more business. I'll show you how to 10x your business, and I'm going to bring in a YouTube genius that's going to show you how to post your videos on YouTube. And you know who I'm talking about, our friend Vinny.
That's right.
Is he the real deal or what?
He's absolutely the real deal. Yeah.
He's the real deal. So if you're watching this, you better register. Go to WeBringYouHome.com. That's going to be on the 11th. Awesome. All right. Got to run. Have a great week.